I think that these structural flaws in the end in the system will ultimately result in a change. And the rise of China, the relative rise of China, will also result in a change. So you have these two forces. And the question I'm trying to raise is, do we get ahead of that change, or do we help manage that change and affect some sort of rebalancing of the system? And to be absolutely clear, when I say we, I'm talking not about I'm talking about the central banks, the public side, as opposed to the private side coming up with an entirely different decentralized system. Mm-hmm. So this is partly where we may part company at that point on the issue.
I'm all in favour of choice.
Yeah, exactly, in favour of choice, but just to be clear.
Thank you. So can I ask the other members of the panel if they share the governor's analysis in the speech, because I feel confident you've probably read it. If you haven't, do say, because I wouldn't want to unfairly grill you on something you haven't read. But Dr. Haldane, do you broadly share the governor's Freudian slip there?
I've read it. I've read it twice actually, and I do. Yes, I mean it's. Interestingly, I doubt there's very much strong pushback on the diagnosis. This asymmetry has been here for quite some while, at least since the breakdown of Bretton Woods. I agree with the governor that those tensions have become more acute of late, as many economies have become in some ways more dollarized, at least in terms of the debt that they issue. There's no question that the one solutions, and the governor floated one in his speech, the synthetic hegemonic currency.
Just trips off the tongue, doesn't it? Yeah.
Okay, so a little while back, that this was one we didn't actually speak much about. To be honest with you, this was a little bit of an outlier. But the idea here is to have people transacting, banks and firms transacting across borders using a synthetic or universal currency of some kind, right? Some kind of blended currency. Of course, I say that it wasn't spoken about much until recently because Governor Carney made some very interesting remarks. I think, I don't know how many of you actually saw these. I thought they were quite fascinating, actually. Just a few weeks ago, proposing basically this, right? So, and I suspect it's no accident that this work was done end of last year. But of course, he went much further, and also, if there's a third piece of reading I can encourage you to do, is actually read that speech. It's quite long, but really quite fascinating. Where, well, he is talking about the replacement of the U.S. dollar in international trade because of the sort of imbalances that creates given the shifts in the global economy, and rather replacing it over a long period of time. He did stress that over a long period of time. Replacing it with some kind of what he called a synthetic hegemonic currency, SCH. I think it's going to go down in history, right? Synthetic hegemonic currency. So the idea here is that there is a new exchange, in fact, essentially an issuer, so presumably some kind of multilateral organization of some kind, that central banks are able where essentially they're able to buy this universal CBDC for their own local currencies. Now, like I said, no deep analysis has been done of this, but straight away you can see that there's a FX risk here because if central bank A buys using its local currency, buys some of that blended currency, well, over a couple of days those rates shift and so on. So there's questions about how to manage that risk. Anyway, regardless of that, the idea then is that if a bank A can essentially buy from via the central bank, I should say, this universal settlement currency and use that for all its cross-border transactions, right? Things become, at that level, very, very simple, right? Where, again, you have to have this transaction across different ledgers, but essentially, you have one single claim that can be transacted across different ledgers.
Collateralized stablecoin. That means tokenized assets whose value are expected to remain constant in some unit. So if it's a dollar stablecoin and you have 10 of it, you're expecting its value to remain stable at $10. These assets have a backing asset, in this case XRP. That means that there is something that is supposed to guarantee its value. Now, in some of those systems, you can actually redeem the stablecoin for the backing asset. In some, you can't. What's interesting about this proposal is that the stablecoins are perfectly liquid to XRP at face value on the ledger. So in other words, if you have a dollar in a dollar stablecoin designed on the system, what you have is a $1 claim on XRP enforceable by the ledger's payment mechanics. And the reason that that's important is with some other stablecoin designs, if the stablecoin isn't popular, it won't necessarily be liquid. If it's not listed on an exchange, if it can't easily be deposited and withdrawn, it won't be that useful. By the design of this system, the stablecoins can be offered through the on-ledger decentralized exchange, and they spend like XRP. So you don't need to find some way to make them liquid. You can just spend them right on the ledger. And of course, they can be pegged to anything that someone can provide a price feed on. Fiat currencies are probably what people typically think of, like dollars and euros or whatever. But they can also be pegged to things like stocks or precious metals or any other value source. As long as someone can provide a price feed for it, you can have a stablecoin pegged to that value. To redeem a stablecoin for XRP, we'll have to modify the IOU to XRP order book logic. Essentially, one synthetic offer will be injected into that order book that represents redemption against the collateral pool. That will redeem against the least collateralized positions first, eliminate them, and sort of cleaning out the junk. If there are reserve funds, it can even redeem against positions collateralized below 100%. But if there's no reserve, then you can't redeem against under collateralized positions. So, for example,
Those who cannot remember the past are condemned to repeat it. Recreating a virtual global gold standard would be a criminal act.
Welcome to the Cryptoteacher. And guys, please like and subscribe if you do like what you're listening to. Please inform your friends and family and spread all over social media. It is imperative that we get back to learning finances and understand how the world really works. Because once we understand how the world really works, we understand that everything is planned out. Now, I want to thank those who purchased the books Cryptoteacher and the New World Order book. Remember, those books are mandatory because they show you how the world really works. Also, those who donate to the Cash App, Patreon, much love, keep it coming. And then also those who are shopping at both stores, much love, keep it coming. And of course, guys, we get into Bitcoin and cryptos first. And as we can see, Bitcoin has definitely broken down. And what happens? The rest of the cryptos break down. And remember, guys, when we go down, it's hundreds of billions of dollars. But we know why. We know the Fed wants to shrink. But we also know to stay focused on the stable coins. I'm going to talk about that later because the indicators are so crucial. Now, we have 1% of the Bitcoin supply has been locked into WBTC protocol, of course, on Ethereum. And we have 141 million outflow from Bitcoin products. So we see the institutional money leaving. Also, we have Bitcoin miners unloaded 5,000 in 1 week. So, guys, this selling pressure is definitely hitting Bitcoin. So, of course, it's going to hit the rest of the cryptos. We know we are in the most manipulated market. Now, getting over into the indicators, which is so important, especially if you're trying to make money. Not your financial advisor. This is not financial advice. Please do your own research. Of course, volume. Tether and USDC. Guys, when Tether and USDC over that dollar, we get drained, and you could clearly see it. When we're below that 99.9, then of course the market gets to pumping. Guys, remember, this is nothing but an algorithm controlling this whole system. That's the reason why it works the way it does. Bitcoin goes up, rest of cryptos go up. Bitcoin go down, the rest of the other cryptos go down. But we could actually look at the Bitcoin dominance to find out, okay, we're definitely going to be headed lower. The Bitcoin dominance told us everything. Right now, there is over 10,000 cryptocurrencies, and we know only 1% is going to survive. Now, guys, do not forget to pay attention to the amount of money the Fed is doing. They keep rolling over the same $400 and some billion. That's why the stock market hasn't been doing much, and that's the reason why, of course, we've been headed lower. Remember, they want to shrink liquidity. They're going to be closing down that facility where they were buying ETFs and bonds. Of course, they tapped BlackRock to do that, but that's going to be closing by the end of 2021. And guys, do not forget about Grayscale. Remember that lockup period ends anyway, end of June, early July. And remember the Bitcoin Trust has been closed up this whole time. So guys, remember the amount of assets they actually own. They can swing the market. And just like I stated, guys, we're going to be headed lower. We have this last month of June, once it rolls off, higher inflation. We're going to have higher yield rates starting in July. So definitely, guys, it's going to hit cryptos and it's going to hit stocks. But it's going to hit cryptos more because why? We're still in the speculation phase. We're not in the real use economy. Remember, they have to kill this old legacy economy in order to bring in the new crypto economy for the fourth industrial revolution. But let's get over into the actual crypto news. Now, we had David Schwartz send out a tweet. Today, I introduced my vision for adding federated sidechains to XRP Ledger, which means a lot of things, but essentially that anyone who wants to can run a side chain to XRPL. Now, of course, guys, what this would do is increase capacity for scaling, also new features for DeFi development, plus smart contracts, which we know Flare also will be doing that's attached to XRP. XRP and XLM are nothing but synthetic stablecoins to actually move the assets, but you also get collateral. And that's the reason why I played those videos again. So therefore, you understand the vision. If you are these big banks that are moving billions of dollars around, you still want to have collateral. It's nothing but an IOU, just like the US dollar. Now, guys, we have gold-backed digital token to hit Turkish markets following a new partnership. Also, we have the Chinese government agency issues blockchain development roadmap. And guys, we know everything is going to be tokenized and put on blockchain. And we know China is leading us the way into the fourth industrial revolution. But we funded it. We funded everything in China, Israel, Africa. We're funding all of this new technology, but we are the ones behind. Do not forget to check out my Society 5.0 video so you can see in San Francisco, they designed all of this, the drones, the AI, the robots. Also, we have Polkadot propose its first Kusama parachain auction this month. And we have the Spanish seafood firm partners with IBM for supply chain tracking. And guys, do not forget about VeChain. Of course, we have the Belt and Road, which is going to be so important. And lastly, guys, we have the World Economic Forum releases policy toolkit for DeFi regulation. And I actually put that in my Patreon, guys. Remember what Brian Brooks stated. DeFi is definitely the new banking. But guys, remember when it comes to the New World Order, it's all planned out. And we're starting to see all the pieces of the puzzle being placed together. But that's all I have for you guys. Don't forget about the books, Cryptoteacher and the New World Order book. Also, if you're new to cryptos, Coinbase, Bitrue, Binance, do not forget book links and crypto links are in the description. The Cryptoteacher stock channel, do not forget, Cryptoteacher stocks. You have your Cobalt, your chip stocks, your banking, your gaming, while everybody's sitting at home, got that home stocks, the C-word, the biotech stocks, and while everybody's at home getting free money and waiting on that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
This effort. And China has big plans for this. They intend to seed their digital yuan into the global environment by giving it away to visitors at next winter's Olympics. When they arrive at the airport, they're going to get yuan digital wallets. They're going to receive digital yuan. They're going to use it throughout their visits to Beijing, and then they're going to take it back to their home countries. They see this as a huge advantage. Why? Because who controls the underlying protocols? Who controls the underlying standards of the future of money will control the future.